How we doing, everybody? Today is Wednesday, April the 17th, 2024. Just doing a real estate tap in with you for today. Just wanted to continue from yesterday and go over some more statistics when it comes to seller financing, owner financing, and the creating of notes. So out of a $28 billion industry, half of that, 50%, is through single family homes. Land represents about 13.6% of the overall 28 billion, and commercial is 33% of the whole industry right now, and that's up about 60%. And the reason that is because of all the issues that are going on in the commercial sector. A lot of private money is running over there to take advantage of some of those opportunities to help some of those people out. Some of them need funds to be able to manage this high interest rate environment that we're in, and sometimes the deals still pencil when obtaining private financing on those commercial deals. And then what's bringing up the rear is just kind of like unknown types of properties. If they don't fit into land, commercial, or single family, that's just above 3%. So that kind of rounds out the total of the $28 billion and how it's broken down between asset class. So like I said, the commercial's been up 60% over the last 5 years, and you're probably going to see, that continue because of what's going on in that sector. And then residential is up 17% over that same time period. So you're seeing an increase. You're seeing, a lot of opportunity over in the residential seller finance, creative finance, and note creation space. And then lastly, what I'll just go over is the loan to values when creating these loans. For residential, you're looking at a 74% loan to value. So that means that people are putting down, up to about 25 to 26% down when you are creating financing on a property. So, sometimes people think that people don't have the money to get into these homes, and why would they do it if they can't go down to their bank and get qualified? There's a lot of different reasons, and a long time ago I was taught not to ask why all the time. So just know that people put down 15%, 20%, 25% on average when they're looking at these opportunities to get into these homes, and they're not getting qualified by banks. On the average price range on the residential side is $248,000, just over that, just over $248,000. So that's not quite at the median home price in the country. The median home price in the country is over $400,000, but there are a lot of areas where there are homes that fit into this $250,000 category, and this is just the average. So that means that you are getting people to offer seller financing and create notes on properties that are well above $248,000, and then obviously below as well. So it's a really strong industry right now. It's on the rise. With a lot of banks that's going to be consolidated probably over the next 5 to 10 years. Probably going to go from over 4,000 banks to probably somewhere under 1,000, if not less than that, with all the issues that these banks have. So if you have a property, if you have a portfolio of properties, or if you're wanting to get into real estate, please look into real estate notes. If you have a retirement account, again, look into real estate notes, because even in the worst circumstances, if there is a crash, if you're under the mindset that the market will crash, when you're on the note side of it, you can always get the property back to make sure that you can recoup your money over the long range over the long time period. Once you get the property back, even if it's worth half of what you paid for it, you can create a new note, you can put somebody else in the property, and you can still make the deal pencil out over time, based on your initial investment. And then again, like I said, when you are getting 15-20% down, and then you're collecting payments, and let's say somebody has issues 12 months down the road, 18 months down the road, whatever the case may be, you've collected all of those payments during that time, plus a good down payment compared to what it is that you put into the property in terms of what the money that you had to pay to get into the deal and to purchase the note or create the note. So look into it. It's a great time. I'm going to be releasing the information on the private Facebook group on Friday. Just making some final tweaks to it, and it should be done by Friday. So if you're interested in that, we'll give you that information on Friday. Come join, come learn notes, come, and get that money to grow for you, keeping up with inflation or even beating inflation. Saw a deal yesterday on a note. It was 11% return on about 130 payments, and was looking for roughly about $38,000. So some people have that money in their retirement account or sitting in some account, not getting any interest, or maybe getting 4 or 5%. You could get 11% interest on this property, on this note, I should say, and I think your investment of value on it was less than 50%. The property was worth, probably it was, your interest of value on this one was probably somewhere around like 65-70%. So you're in good shape if and when there is a adjustment in price, or prices come down somewhat. So those are opportunities that are out there. So if anybody's interested, please comment, and go to the YouTube channel, Abundant Capital Group, subscribe there, and let me know that you want more information, and we'll talk about what it is that you're looking to do and see how we can get you involved. All right, have a great day. Talk to you soon.